Right, so if I've done it correctly, we should be live. We should be live. Now, let me have a little check. Yes, we're live. We're live. We're live. Oh, shit. All right. Oh, I've got my beer with me. Of course, it's Finance Friday, isn't it? So, sit back, get some munch. Of course, look on your screen, subscribe, like, and comment. Do that down below, and we will be the best of friends. Now, I've got my San Miguel here. It's nice to the taste. You know, I only really drink every Friday. Drinking is a waste of money, but yeah. Without further ado, let's just get straight into Finance Fridays, and of course, we're going to start off with the biggest weekly movers. Now, I know my face is going to be in the bottom left, so you're not going to be able to see the fallers. But don't worry, because I'll be saying them out loud there. Ooh, that's the bevs for you, and you're gonna see me stutter and stuff like that because that's just what happens. Normally I can edit it, but because I'm live and that, it don't really happen like that. Anyway, biggest weekly movers. So obviously you got the risers here. Blue Apron up 16%. So you got big moves there for Blue Apron. You had AMC up 8%. So a mean play to be up 8% on a risk-off week. Don't forget, this was a risk-off week. You know, most stocks were down this week. And yeah, AMC to be up. Huge moves there. Obviously you had Novavax up 10%. There's a healthcare play, so not really much fussing with that one. But as I said, with the fallers... Oh, what's this? Oh, don't worry. You wouldn't have been able to see that anyway. But no, it was just my slideshow buzzing about. But anyway, fallers, you had Canopy Growth down 23%, so a poor week there for Canopy Growth. But as I said, if it's a risk-off week, they're going to get smashed. And you had Trade Desk down 17%. Shopify down. Notice how, look, AMC, I've got a dash here, then 8%. With these, like, I had to put my colons, because when I first tried it, I put the dash, then the minus, and it just didn't work out, because obviously I had minus 17% with the dash as well, and yeah, it didn't look right, so I had to use the colons instead of the dashes, but I think the dashes look better. But look, who cares? Who cares? You got Shopify down 19%, and you got Coinbase down a huge 23%. Now that is one of my stocks, so that is hard to watch. And if you have been watching BG Dollars recently, you'll know that I actually invested in Shopify. I think it was yesterday, or was it the day before? No, I think it was yesterday. Affirm down 25%, and Marathon Digital down. Now, of course, if crypto is getting smacked, then Marathon Digital and Coinbase will both get smashed as well, which what you've seen happen. Moving on, sector movements for the SP 500 during the week. Only 4 sectors were up to date on the Friday. That's a poor day for the S&P, but however, it is still up for the day, isn't it? If we actually zoom out, I presume I can zoom out with it still streaming. Actually, yeah, let's have a look. Look, the SPYs actually just came back big time recently in the past, like, we're talking the past hour and a half or so, and we've just had a big move there, and now it's actually turned positive. We're up about just over 0.5%. Let me just check if I am still... Okay, yeah, we're still live. But yeah, look, we're up at just over 0.5%. Wait. Does this mean we can... Like, what does this... Oh, hello there, Vermacht. Oh, yes, hello. How you doing? I'm here with my beer. I'll be seeing you later anyway, Vermacht. But yeah, look, S&P it's up for the day, so it's all right. We're looking still decent. Can I do it from it? What's this? See, like, just go away. No, I don't want that. I don't like that. Get it off. I want it. Oh, what's going on now? Look, sorry, technical difficulties. You know, so that's what I'm saying. In a video, sometimes this thing happens. We're gonna have to start from not from the beginning. We're just gonna have to skip through the slides. It's all right. Look, these things happen. As I said, while you're waiting, you may as well subscribe. Hit that like. Where were we? Sector movements. There we are. Look, consumer discretionary, worst performing sector in the past week. Now that is quite huge, actually. It was down. There we are, minus 3.03% right there on your screen. Utilities was best performing, plus 3.3, and it's got it down here in the left, but obviously you can't see that because my face is there. My face is bottom left. Oh, and my beer. So, but yeah, consumer discretionaries worst performing, and utilities best performing. It's not really a surprise that consumer discretionaries are worst performing. Of course, if you've got high inflation, you've got people spending more money at the pumps, spending more money on their bills, spending more money on their loan repayments because obviously interest rates are going up, on their mortgage repayments, on their credit card repayments. They're not going to have the money for clothes and like designer wear and all this, that, and the other because the money just simply ain't there. I'm going to have to get through this one because the rule still applies. I've got another bottle here, and however much I'm left with at the end, I'll have to down. And of course, this bottle we got to get through by the end of the stream. So I'm going to be pretty bevved. But yeah, you're going to see it coming up in a few slides' time. There we are, look, the S&P 500 performance, down 3.87% in the past 4 days. So not a great week for the S&P, really. But I mean, by the way, I can't see the chat. If you're actually saying something or if someone's watching, like, I'm sorry, but you're gonna have to deal with it. Just watch along, isn't it? I'm here, all right. I can't see what you're saying, but I just hope someone is watching. If no one's watching this, anyway, look, right, crack on. Yeah, S&P down 3.87%. As I said, poor week, risk off week. Most stocks were down. It wasn't very good. Got the Nas there down almost 6%. Huge moves there on the Nas for just 5 days. You know, we were up by 295 over here, and we just came crashing down. And there we are at 278 to finish off the week. But of course, when I was doing these slides, it was still market open, so maybe the Nasdaq's recovered from 278. Who knows? But yeah, it's still down in the past week. Russell 2000. Now, of course, this is the small cap index. So a bunch of small little what's it called? Small stocks. That's all it is. And yeah, it was down 3.7%. So not a great move there for the Russell, but you know, it's a bit of a, no one really invests. Well, people do, I suppose. More Nasdaq's more common, and the SP 500. I think are the two most common indexes out there that people invest in. But on Monday, this is the news that we had all throughout this week. So we had pending home sales. Now, I remember Monday, actually. I remember this coming out. I've done a video on it. I've done a video on pending home sales. I was actually going to do a video on all the news that came out throughout the week, but I decided not to. But anyway, this ended that. Oh, look, you see, the San Miguel, they got some gas to them, the San Miguel's, eh? They got some gas to them. This ends a 6-month streak of declines, and some wondered if the brief drop in mortgage rates during May could have sparked the modest rebound. Now, I don't know why it's saying some wondered, because that was the reason. I think everyone thought the reason was because mortgage rates during May had dropped. Of course, in May, you had a mortgage rate kind of go up early May, and then boom. The first time it'd come down year to date. Mortgage rates you hadn't seen come down since last year, really, since 2021. So yeah, they'd been rising this whole time. So the minute you got a dip, buyers would have just flooded in and think, you know what, let's get it in. Let's get into it now. The NAR noted that at the median single family home price and with a 10% down payment, the monthly mortgage payment has increased by about $800 since the beginning of the year. So that's what I'm saying. It just goes to show that rising interest rates, people are going to spend more money on mortgage repayments, on monthly mortgage repayments. That's the median as rose about $800. And of course, no wonder why consumer discretionary stocks are down then. Because if people are paying more money on mortgage repayments, then they ain't got the money to just whiz about and just spend it on clothes willy-nilly and Asda and, not Asda, like Amazon and all this, that and the other. So that's understandable why consumer discretionary is down in the past week. Of course, during a recession, you get the poorest of people. They're just focusing on living and getting through it. Right? When it's an expansion phase, yes, you see often the poorer sort of groups, they actually spend money at Starbucks, they spend money at Costa. They like to spend as if they're rich people during expansion phase. But when it's a recession phase and they can't find work, they're just buying food, they're buying water, they're spending money on the bills, utility and that. And they can barely afford to live. So they aren't buying Starbucks and Costa, and they ain't buying like AirPods and all this smart fancy stuff that they are doing sort of now. Well, it's starting to come to an end, all that. But Tuesday, consumer confidence came out. And this is a big one for the consumer. Obviously, the consumer is just the people that spend, and I need to get through these beers. All right, so I'm just going to shut up for a minute. Look, you can read the slide yourself. All right? I don't need to spoon feed you the information. You can read it yourself. And I'm just going to sit here and drink. All right, just go through it. Now, thank God I've got a bottle opener here. Now, this is Bradley, but look, it's smashed in my bag. Don't know if you can see that. Hopefully you can. But there was some liquid in here. It was like filled up with some liquid drink thing, and it smashed. So I don't know. The liquid must have gone in my bag. I mean, I don't know. It's just got some soggy bag at the bottom, but yeah, I don't know. But anyway, we'll crack this one open anyway. And as I said, I've got to finish this bottle by the end of this stream, and whatever's left, I have to down. They're the rules for Finance Fridays. But of course, I ain't gonna like long it on the slides. I'll go through the slides like normal speed. I've just got to get drinking. Now I've already had one before coming on here, so I might start to feel a little something after this. Who knows? Oh, that's a perfect pour. See, perfect pour. Not many people can do that. Because their head's bobbling. That's what you want to see. Anyway, I'm sure you've read all this now, but I'm going to go through it now. So unlucky. But the index fell to 98.7. It was down 4.5 points from in May. Look, ignore that. Oh, from 103.2. No, don't worry. Don't ignore that. That's important. So it fell to 98.7 from 103.2 that it was in May. And now stands at its lowest level since February 2021, people. While the present situation index was relatively unchanged, the expectations index continued its recent downward trajectory, falling to its lowest point in nearly a decade. So that's just the warning signs again for a recession. Now, when I was reading this, because obviously I read it before I put it on the slideshow, and it was like consumers grimmer. I was like, does that make sense? But then I realised the apostrophe's there, so it's consumers is grimmer. Outlook was driven by increasing concerns about inflation, in particular rising gas and food prices. Of course, look, gas and food prices, I think, are going to continue to go up for the short term. I think inflation is going to come down, but I think gas and food prices are going to continue to either plateau at these levels or carry on increasing at the levels they have been. My bad. As I said, the Samigs are gassy, all right? Expectations now fallen well below reading of 80, suggesting weaker growth, blah-de-blah-de-blah. Not too much, just growing risk of recession by year end. Of course, everyone's talking about recession, isn't it? Everyone's saying there's a risk of recession. People are saying we're in a recession right now. I mean, I'm from the UK, so it's not really like that. It's not as bad here. But anyway, Wednesday, we had the Fed Chair Powell speech. Now, I'm hoping this link works. And there you've got, look, Fed Chair Powell looking dapper. I presume he's putting his hand up there saying, look, we've got high inflation. I'm not good at lip reading, but I think he's saying hi there. But yeah, we'll crack on to this. Now, no guarantee Fed can tame inflation. That's not what you want to be reading, but it is what it is because that is the title to it. And we'll just quickly go through this, and we're not gonna mess about. But Fed Chair Jerome Powell said there's no guarantee the central bank can tame runaway inflation without hurting the job market. So he basically said and come out like, look, people are going to lose jobs. That's how it's going to be. Unemployment rates are going to have to go up to bring down inflation. Because, of course, if unemployment rates go up, people aren't working, people don't have the money. People don't have the money, they're not spending it at the shops. They're not spending it at the shops, businesses aren't selling their items, so they're going to have to bring the prices down, therefore reducing inflation, even causing deflation when prices come back down. And we don't want necessarily deflation, but we definitely want inflation to come down. And we want shops to start reducing their prices. Speaking Wednesday at European Central Bank Forum in Sintra, Portugal. Hey, Jerome Powell is going about places. He's been he went somewhere else the other week as well. Yeah, for the G7 meeting. But yeah, no, he's just going about everywhere, isn't he? But anyway, he is hope that the Fed can achieve a so-called soft landing. I'm fed up with this phrase. We've been saying this soft landing since about January. and it's never going to work out. I'm sorry, but I've been saying it so long. Soft landing is a load of bullshit. It's a load of rubbish. It's not going to happen. And for those of you watching that don't know what a soft landing is, it's the idea that we're going to bring down inflation without having any impact on the job market, so people won't lose jobs, without any impact of like a so-called recession or anything like that. We'll just be able to reduce prices from 8.6% where they are now, highest in 40 years, back down to 2% with no impact economically. We'll be fine with it. What a load of toss, mate. It's a load of rubbish. And he's been saying it since January, and I'm saying, look, it's a load of rubbish. And every time, the last meeting the Fed had, they said a soft-ish landing. So they basically said, look, we can't do a soft landing, but we can do a soft-ish landing. And in a few months' time, they won't be saying soft-ish landing. They'll be saying, look, we can't do it. That's what's going to happen. The raising interest rates just enough to slow the economy and rein in surging in prices without causing a recession and sharply raising the unemployment rate. That's what he thinks he can do. It's never been done before. It won't get done. It's impossible. It's impossible. And if the Fed actually do that, then fair play. But it's just not going to happen, is it? It's like someone jumping off Mount Everest and surviving with no broken bones. Like, it's just not going to happen. Anyway, we believe we can do that. See, this man's deluded. That is our aim. You see, I think everyone knows, any investor knows, someone who's into economics and that knows that it's not going to happen. But anyway, this is what he keeps saying, not listening to that rubbish. But the Russian invasion of Ukraine, he said, made the job more difficult. So that now he's saying, oh, it's going to be harder now because of the Russian invasion of Ukraine, which has been happening since Feb. And in March, he weren't saying it was harder, was he? So, yeah, it's gotten harder. The pathways have gotten narrower. A few months' time, he'll be like, look, there's no pathways left. Put money on it. Put money on it. Well, I have. I've bought into the markets, mate. I think the markets will be ripping soon. Oh, the S&P. I've just looked top right. The S&P is still boosting up. It's up about 0.68% now, 0.7%. But we'll go back to this sort of... anyway, this is about the ECB. We're not really bothered about what Christine Lagarde says. Oh, nearly dropped my pint then. Imagine that. That would be dreadful. Of course, inflation keeps accelerating. Fed raised its short-term benchmark rate, so that's basically interest rate, by another 0.5 percentage point. Of course, that was in its meeting on June 14th to 15th. I thought it was 75 basis point. I could have sworn it was 75 basis point, not 0.5 percentage point. No, I'm not on rubbish here. I swear it was 75 basis point. Fed 75 basis point hike. June meeting. I swear it was 75. Fed raises rates by 75 basis point at June meeting. So this website is chatting rubbish about 0.5 percentage point increase. Oh, my bad. Appears to be ready for another 0.5 percentage point. But of course, consumer prices shot up 8.6% before it. So the Fed responded by pushing up the rate by 0.75 percentage point. Look, I'm sorry. My bad. Clearly the bevs are getting to my head here. Because that wouldn't normally, just go past me. But it has done today. But yeah, so my bad on that one. You're probably reading that and watching me thinking, what the hell are you on? But anyway, we'll quickly just go through this now. I find that quite funny. But it's a strong labour market. Unemployment is at a half-a-century low. Right, that's another. If you've been watching BG Dollars, mate, you know unemployment rates are low. Buy gold, and I've been putting so many videos on it. And if you've been watching BG Dollars, you know when unemployment rates are low, that's a really bad sign for stocks, for the markets in general. Increasingly, economists worry that higher rates could push the economy into it. Yeah, but I want you lot to understand also. I don't care what any economist says. I don't care. I just like to listen to them and think, you know what, that's their view on it. I make my own views, okay? You've got to do that too. Any investor, you have to have your own views. You have to buy your own stocks. You have to make your own decisions, right? Don't listen to me. and then come back and try to sue me if you're wrong. Like, nah, I ain't a financial advisor. You see, I've said it now. No financial advisor. Yeah, so you can't come back at me trying to sue me if the stocks have gone down. I'm just buying in what I think. I could be wrong. I could be right. I could be wrong. You know, no one knows really what's going to happen. But anyway, let's go back to the slideshow now. All right. So, of course, yeah. So, core PCE index. Ooh, that was a big one that came out Thursday. Now, I presume that anyone who's interested in economics knew about the core PCE that came out. US inflation weakened in May. It was a very good result, actually. It was down to 0.3% instead of 0.4% that was predicted. So, it just shows that although inflation was surging in May at 8.6%, a new peak, new 40-year high, all this, that, the other. Core PCE excludes food and energy. So it excludes all the rubbish that's happening in Russia, Ukraine. It excludes all the gas prices. It excludes the food soaring because of wheat that's grown in Russia that's just getting bombed and stuff like that. US inflation weakened in May. So as consumers reduced their spending in response to this year's surge in prices. So that's another big thing you're going to need to watch for. Consumers reduced their spending. So that just goes to show that the higher prices are working. You know, we've got the higher prices for gas, for bills, for interest rates on loans, credit cards, all this, that. So it goes to show that the consumer, aka the people, the workers, the majority of the people living in the country, don't have enough money, and their spending has reduced in shops and stuff. And that is why we're starting to see inflation come down for core PCE. So that's very, very encouraging for the Fed, and it's very encouraging for investors as well. The price index for core personal expenditures, Federal Reserve's preferred gauge. See, that's what I'm saying. The Fed actually prefers core PCE because it excludes food and energy. That's what I'm saying. It takes all the politics out of it, and it just shows inflation purely in your country. And yeah, because of course the Fed can't do anything about the Russia-Ukraine situation. The Fed can't do anything about rising gas prices, but the Fed can do something about the consumer spending. The Fed can do something about prices of just clothing and items such like that, because that's not affected by the war. That's affected by the Fed's decision. And of course, as the Fed's been raising their rates, those things have started to come down, which is shown in the core PCE. Down here, you might not be able to see it because my face is here, but the headline PCE inflation rate of 6.3%, which includes spending on food and energy, remains close to its 40-year high. So we're still not there, are we? We're still very, very far away from where we want to get to, but it's positive signs on the core PCE. This is unemployment claims by state. Every Thursday you get a new unemployment claims number. And when you go on to the report, they actually do it by state. So you have a list of all the states. Now, if you're from like Utah, oh no, Utah's there. What's the W? TUV, ABCD, FG, HIJK, MFP, QRS, TUV, W. West Virginia. Is that a state, West Virginia? Anyway, basically, if your state begins with a W, TUVW, if your state begins with a W, X, Y, and Z, you aren't going to be able to see it because it only goes down to Virginia and it's alphabetical order. That's what I was trying to say the whole time. Sorry. There's a state called Maryland. Hey, I love Maryland cookies. As I said, I'm not from America, so I don't really know all of them, but anyway, let's just... I like to go through what's just happened state by state. It's just quite interesting. So, more claims have been filed for Connecticut. Oh, Georgia's come down. You see, that's what I mean. If it's down, it's good. If it's up, it's bad. So, Georgia down 1,800. So, that means there's 1,800 less claims from in the last week. Or from a week earlier. Yeah, there's 1,800 claims less from the week earlier. But, look, Missouri is struggling. 1,170 more claims for unemployment. What's this? Is that Ohio? 2,472 claims in 1 week for unemployment. If you're in Ohio, like, I'm sorry for you. I would not be moving there. But I'd get out of there. If you're in Ohio, pack your things and move. Because you're struggling. You're struggling. What's this? Minus 2,000. For Texas. Okay, so Texas is moving nice. It's moving nice there. So yeah, if you're in Ohio, get out of there and go to Texas. You'll find jobs plentiful in Texas. But to be fair, I think all states are going to be fucked sooner or later. But yeah, let's move on to the next one. I just quite like that chart because it's quite interesting. It gives a breakdown state by state, so it goes to show where's actually worse in the country compared to other areas. Thursday, you had personal spending. Slash personal income. Now, I'm just going to fill up my... Oh, no, that rose quite a bit. I didn't want it to rise that much. Because that's what I'm saying. I'm going to have to down the rest of this when I finish the stream. It does taste banging, though. Beer is, like, so nice, but yet so bad. Now, I feel like I've got a beer tash. Because I can actually, like, feel it now. We're good. It weren't really too bad. But anyway... Look. Personal spending / personal income. Personal should be a capital P. My bad. Personal spending notched its slowest growth in 5 months. So it just goes to show the consumer has less money. It's a recurring theme, people. All this data. Look, with a gain of only 0.2%, while April's figures was also revised down to a gain of only 0.6%, from an initial estimate of 0.9%. So it just goes to show personal spending again down, but that is very good for inflation. I keep coming back to the same point. I think June inflation, I think we're going to see a nice little inflation number for June. I can't lie. I think we're going to see a nice June inflation number. And if we do, markets will be up. Markets will love it. I think Wall Street will be laughing at that if it happens. But personal income rose 0.5% on the month, largely reflecting pay increases. So we don't want to see pay increases. We don't want to see pay increases in terms of an investor point of view. That if you're struggling, then you do want to see pay increases. The large majority want to see pay increases because obviously rising inflation, rising bills, rising payments for gas and that, you want to get paid more. But in terms of inflation, you don't want to see personal income. So it's a bit of a contradictory. It depends on your personal instance. But my personal is like I live with my parents. And to be fair, I'm from the UK, so this doesn't really matter to me. But in terms of my investing in the US, I don't want to see pay increases. What I want to see is inflation down. That's what I want to see. The savings ratio, meanwhile, ticked up to 5.4% after hitting its lowest since the great financial crisis earlier this year. Ooh. I go, ooh. I mean, it doesn't really mean much. It just means people are saving slightly more saving. Which is good, because obviously we don't want people to spend, because otherwise inflation goes up. I've never got any time to drink my beer. You know what? No, you lot can wait, right? Yeah, you lot wait. This is Friday, so I know we're coming to the end of the slideshow. Obviously, Friday's the end of the week. So, and I don't want to be downing a full pint, all right? So you lot can wait. I'm going to be drinking a little bit down on this. Yeah. Right. I'm feeling it, not too much, but like, you know when you feel slightly bev, like is started. It's started. But anyway, Friday manufacturing PMIs came out. PMI falls to 2-year low in June amid contraction in client demand. Output broadly flat as firms see fresh drop in new orders. Inflationary pressures ease. Future output expectations drop to lowest since October 2020. So that just goes to show, look, businesses out here struggling. This is the big thing. Inflationary pressures ease. Now, when I read that, I was up in arms about it. And it's really good news. Because, of course, if that's coming out in the manufacturing PMI on key targets, key events, for June's report, this is for June, then you know that the June CPI report is going to be very, very good. And the main issue right now for markets, for any investor, if you're an investor, right, just listen to this, right? The main issue as to why stocks are continually going down, the main issue as to why there's no really rally going on, is because inflation is still increasing. The minute inflation starts coming down, stocks go up. I'm calling it. I've been saying that. And when it does happen, you'll know BG Dollars told you. Here and then. Finance Fridays, mate. 1st of July. You heard it from me. With a pint in my hand. Alright, with a pint. But anyway, manufacturing PMI chart. US manufacturing PMI. Look, we've dropped on off a cliff here. Look, we had a little bounce there. Nothing really much, but boom. Not looking good again. When we get below 50, that's a very, very painful sort of sight to see. Of course, as we know, look, above 50 means growth from previous month. So we're still growing from month to month, but we like to be in like the 60s, the 55 to 60s sort of range. And of course, because we've spiked up, it means we will spike down. And it will be a matter of time. Sorry, pardon me, as I said, Sammings are gassy. But there will only be a matter of time before we go below the 50s. And of course, we just pay attention to the source. This is the S&P Global down here. Vermax, if you're still watching this, then blimey O'Reilly. You're definitely not. You're definitely not. But hello, viewers. If anyone's watching this, look, I'm lovely to see you. I can't actually see the chat, so it's unfortunate. But look, I hope maybe you've got a pint, eh? Cheers, if you have. If you haven't, then just enjoy, drink, munch, whatever. As we move on to the Treasury yields now. And the Treasury yields were down for the 5 days, look. Boom, boom, boom. Look, on Fridays, we just dropped off a cliff there right at the start. We recovered a bit, but we're down to 2.8s. I remember when exactly we were at the 3.2s. We were even at the 3.4s. And we were looking very, very high up. Yeah, look, 52-week range. We hit 3.5. That's big. That's too high. I don't like to see that. But anyway, US Treasury moving downwards. Does that mean investors are rotating back into stocks? Now, that is a big question that I think everyone wants answered. But you're never really going to find the answer for it until if stocks do go up. Stocks have had a bounce. And I'm releasing a video soon, so do subscribe. And leave a like if you are enjoying the stream. But do subscribe anyway. Because, of course, I'm releasing my video on why I think the S&P 500 has hit its trough for the next 3 months. So yeah, short term, I think the S&P 500 has hit its trough. I don't think the S&P 500 will make a new low. Did I get my predictions right? Now let's open up. Oh, what's an F? I don't think an F means anything. Now I'm going to check the chat. Ah, that's disappointing. We've only had Vermact, and we've had 1 view, and he watched for 49 seconds. But it's all good. It's all good. This is going to a video anyway, so it's all good. If you're watching on the video, hello YouTube app. Do watch, and as I said, do join me on the lives. I'll be doing this every Friday anyway. But my predictions for last week. Let's see if I was right. So it would have been Monday, 27th of June. Today, Friday, the 1st of June. Well, let's see what happened. So. Pending home sales, I said beat expectations. Look at that, look. We beat expectations, motherfucker. Yes. So I got one right. A little pat on the back. Consumer confidence, I said below expectations. Yes, we won it again. We predicted it. We predicted it was below expectations. The forecast was 100. It came below expectations. So we both 2 out of 2. 2 out of 2. We're flying. We're flying. GDP, I said beat expectations. I lost. But to be fair, it's final, so it don't really count. Look, I'm not cheating the system here. It's final. It's final. It don't count. It don't count. Alright? It don't count. If it's final GDP, it don't count. Alright? Don't try and get at me. If it's final, it doesn't count. Obviously, if it's just normal GDP, then it counts. Because it's final, it don't really count. So I'm saying I'm still 2 out of 2. Alright? I'm saying I'm still 2 out of 2. Core PCE, I said meet expectations. Ah, it was below. Ah, shit. Shit. Ah, I thought it might have been below as well, but I thought it would be meet expectations. Ah, I should have got that one. I should have flipping got that one. But, alright, okay, well, alright. Okay, we were wrong. Unemployment claims, I said beat expectations. Let's see what happened. Unemployment claims. Yes, we beat them. We beat them, all right. I mean, when I say beat, I mean higher. So I don't mean like, oh no, you're definitely thinking I've got it wrong here. Look, if I've said beat, I think it's higher. Okay, all right. If I say beat expectations, it's higher. Okay, right, good. Because of course, actually, if we beat expectations, we want it lower than this. So then less people will file for unemployment claims because obviously that's better. But I'm just going on beat expectations means higher. Honestly, if I'd done the predictions, that's honestly what I've gone on. So I'm counting that, right? I've got that one right, okay? I've got it right, all right? I honestly thought it would be higher. That's why I said beat expectation. Anyway, personal income spending, I said miss expectations. Let's see if I got it right. Personal income, oh, it met, but personal spending was less. So look, I'm counting it. I don't care. Shut up, all right? I'm counting it. All right, look. Personal income met, yes. Personal spending was less, all right? I said below expectations. Boom. It's personal income slash below. It was below expectation. It was below. Look, 0.2, 0.4, that's below, all right? So I've won it. ISM manufacturing index, I said miss expectations, aka below. What's happened? And it was below. Oi, 100%. Don't try and talk to me on the economics level, right? 100%. I got them all right. I mean, you could argue GDP, but look, I got them all right, okay? All of them. Actually, no, core PCE I got wrong. Shit. Core PCE I did get wrong, yes. But everything else, right. I mean, you could argue final GDP, yes, but no. Everything. Bomb. I've done very well, alright? And I'm having a drink to that. As I said, every Finance Friday, I've made my predictions. And that was for this week. And of course, if we go back to the slideshow, you're going to see my predictions for next week. Don't tell me I have to start from beginning again. Nah. Alright, don't worry, we'll just rock it through him. Where were we? Okay, that really wasn't that bad. Did I get my predictions right? Yes, I did. Shut up, I got them right. I'm so happy about it. New stocks I invested in this week, look, Roku and Shopify. Now, of course, you're probably thinking, why have I invested in that? And I know nothing about these companies. I actually couldn't tell you what Roku even do. And you're probably, yeah, you are definitely saying to your screens right now, well, what are you doing investing in Roku? What are you doing investing in Shopify? Oh. I think I dribbled. I spilt some a little bit. Look. Roku, risk on. Shopify, risk on. Now you know why I invest in them. I'm a macro investor. Right? I look for inflation. I look for unemployment. I look for when the market's oversold. I look for turns where I think the market could have a bounce. And then I simply invest in risk-on companies. And these are two risk-on stocks I invested in, Roku and Shopify. But I'm fuming today. Now, let me show you something. So the S&P doing very, very well today. You know what? New tab. SPY price. Let's have a little look. Yeah, S&P up 0.65%. So you think, oh, risk on day. Let's see. My stock should be up at least 3-4% on that. Okay, Roku's climbed up recently. Okay, is that 2.17? I'd think that would have been more up 3-4%. We'll see where Shopify's at now. Why is Shopify down? Or break even, whatever you want to call it, when the S&P 500 is up like 0.7%? Shopify should be up 3-4% right now. It's just... So, I mean, I sold my S&P 500 to get into these risk-on stocks, knowing that the S&P 500 would have a bounce, and risk-on stocks would therefore have a bounce. But it ain't work like that. Because Shopify is down when the S&P 500 is up, and it makes no sense. It makes me fuming. It don't make any sense. Oh, don't get me off. We're going to start from the flipping beginning. Oh. But I will sort this out. You're going through the pain with me here. Look, I'm starting to cry now. Like, not actually, I just, pissed off. But anyway, news next week. Oh. US are slacking big time on the news next week. Monday, bank holiday. Are you stupid? Tuesday, nothing major. Mate, I looked and there's nothing going on Tuesday. Wednesday, though, we've got the JOLTS job openings, important for unemployment, and the FOMC meeting. So, of course, Fed Jerome Powell's going to come out and give his meeting. We'll have to see what he says. To be honest, every time he said the same thing. But every now and then he comes up with something stupid. He says something mad and it moves the market. So you never really know with Jerome Powell. But, as I said, FOMC meeting on the Wednesday. I'll be sure to be watching that. Maybe even live streaming it. Probably not, though. Probably not. I'll do a video on it, though. But anyway, Thursday, ADP non-farm employment change comes out. Friday, non-farm employment change. Average hourly earnings month over month. And unemployment rate. So Friday's a big day. You've got the non-farm employment change. You've got the average hourly earnings. Very important for inflation. And you've got the unemployment rate coming out. So hopefully we want the unemployment rate higher. Not for the people. In terms of investing. Only in terms of investing, right? In terms of investment, we want the unemployment rate higher to bring down inflation. Okay, that's the viewpoint on it. That's the truth to it. Oh, what are my predictions for next week? Oh, now we've got the JOLTS job openings, and I think it's going to miss expectations. I think ADP non-farm employment change will also miss expectations. And you're going to think, look, looking at the screen right now, you've already probably read the others. And you're thinking, you're just so, like, hawkish. You just think like, employment's going to be rubbish next week. And I do. Unemployment claims, I think, will beat expectations, though. AKA be higher, right? When I mean beat, I mean higher. We've learned that from today. Non-farm employment change, I think, will miss. Average hourly earnings, I think, will be above. And unemployment rate, I think, will miss. So there's no good news on this screen what my predictions are for next week. There is no good news at all. But there you are. There you have it. All right. That's what I think. And hopefully I'm right again, because this week I've done very, very well. What I think for stocks next week. S&P 500 to move upwards. Small cap stocks to perform well. Tech stocks to perform well. Energy to continue moving downwards. Of course, we've seen oil. We've seen these stocks continue moving downwards. Risky stocks, cannabis plays, unprofitable businesses to push up. And crypto to also continue pushing up. Of course, I'm in Roku. They're all risk-on stocks. So hopefully we get a nice week for stocks in general. I think we will. And of course, I'll be bringing out my video of why I think the S&P 500 has reached its trough. But I'm still fuming today. How is the S&P 500 up 0.7%? And Shopify and flipping Roku. Well, Roku is still up 2%, so we'll allow Roku there. But Shopify was only up like 0.3%. It makes me fuming. Stocks to watch, obviously. My Roku there, Coinbase there. I'm investing in both of them. TARK, very, very risk on. I was tempted to go into TARK, but I thought, nah. You got Shopify there, which is another investment. Stoneco, FedEx, and Zdensk. Oh, sugar. That's the end of the stream. Now, of course, you know what happens at the end of the stream on Finance Fridays. I've got down this, and I'm already a bit bevved. I hope you did enjoy it. If you did enjoy it, please do subscribe. Leave a like. I'll put my thumbs up for the like. But like, as I said, I'm a bit bevved, so don't really, Anyway, cheers. Cheers. A good finance... No, it wasn't a good finance week in the markets. Awful week this week. Of course, I brought out my predictions. Stocks to watch are on your screen right now. And yeah, I've got down this. Now that was not what I wanted to do, and my stomach feels bloated. Right, well look, we're ending it there. We're ending it there, people. I hope you did enjoy. Please do leave a like, subscribe. As I said, more videos will be out every single day, mostly. And yeah, all on finance and everything. Please subscribe, leave a like. I've said all this. See you in the next one, people. See you later. See ya. End the stream.